Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faridi. And in the last few minutes, we have seen a surge when it comes to the Nifty. And that's the reason we are almost at that level of 19,400 for the Nifty. So quite a bit of up move is what we have seen. Of course, it's all sectors that are holding up in the green, barring PSU banking names which are coming under pressure, led by SBI and BOB. Rest of the sectors are holding on to gains. In fact, L&T, Reliance, ICICI Bank, Axis Bank, these are your top contributors at the Nifty level right now. So all of these stocks standing with a gain of anywhere between 1 to 3%. In fact, a lot of stocks are actually at all-time high levels from the real estate pack, which itself is sitting at a 15-year high. You have names like Brigade Enterprises, Lodha, as well as Phoenix Mills, which are sitting at all-time high levels. We should probably pull up those counters as well. And then, of course, the mid-cap IT names. Surprisingly, they too are at an all-time high despite the macro headwinds that we have seen. So a Birlasoft, a Sonata Software, a Persistent Systems, all of these are holding up in the green. It's not just India, rest of the globe is also doing okay. In fact, South Korean market saw a sharp bounce back of almost 5% despite that short selling ban coming in. So in fact, that has had the best session since March of 2020. So a massive upsurge as far as Kospi is concerned. And then of course, earnings reaction is what we are dealing with. Today we got the numbers of Exide and Bharat Forge. Both are reacting on the positive side. However, on the weaker side, it's AIA Engineering, Indigo Paints, Polymer, and the name should come up for you on the screen. Those are the stocks which are reacting in the negative, while JK7 continues to surge, a gain of almost 9%, Aisha.
Yeah, the only drags really seem to be SBI, at least on the large caps. And even after a positive set of numbers, you didn't expect SBI to react the way it is. BOB, of course, was a drag in terms of earnings. The profits were much lower than what the street was anticipating, and that can be felt onto the stock price. But let's talk about, one exclusive piece of news that we're currently getting right now. And we're learning from reliable sources that promoters of Signity Technologies, which is a listed entity, are looking for an exit. Let me take it across to Anurag Joshi, my colleague, and get in more details on the same. Anurag, what are you picking up from your sources?
Yeah, so two private equity funds, Bain Capital and CVC Capital Partners, are exploring to buy a stake in Signity Technologies. This is a Hyderabad-based digital engineering and software company, and the private equity funds are looking to buy the promoter holding in the company. Now, the promoters are holding about 33.5% equity stake in the company, and if the sale to the investors goes through, they would necessarily need to make an open offer. According to the SEBI regulations, they need to make an open offer of 26% to the public shareholders in the company. Now, a few days back, the company had notified the stock exchanges that the managing director, CV Subramaniam, has resigned from his position. Now, CV Subramaniam is a key promoter of the company, and he's holding 10.75% equity stake in the company. If this deal also goes through, it'll be a second of its kind in the digital engineering space, where a private equity buyer is involved. In July, Carlyle had increased its stake in Quest Global. And this deal is watched for if there is any kind of interest from private equity investors.
Thanks, Anurag, for bringing that story. Let's pull up the stock of Signity Technologies as well. It's actually cooled off a bit, sitting with a gain of around 1.6%. But time to welcome the guests on the show. We have Kunal Bothra, Sudeep Shah joining us to talk to us about the technicals of the market, and Daljit Singh Kohli, of course, joins us on the fundamentals. Kunal, start with you. 19,400 on the anvil. If we do end above the mark of 19,350, how positive do you think it will be?
Good afternoon, Nisha. So I think 19,200 actually was the major resistance point. So I think we've managed to scale past about those levels, and now I think we could probably be adding a buffer of at least another 1% for the index about the 19,200 mark if we close at this 19,400 odd levels for the index. I think the good part of the market so far is that the market breadth is quite vibrant. You've seen mid caps, small caps are the ones which are seeing some high priced action for themselves. But the concern for the market is the lack of underperformance from these larger cap names. So yes, many of these large cap stocks are showing some signs of recovery. But then when you're talking of the index recovering 400, 500 points and the large caps recovering maybe a couple of percentage points from the previous swing lows, it may not go into a very in sync kind of a price action. So we would probably wait out for another couple of days. If the large cap stocks, they start to participate, then the momentum for the index futures would also get a lot more positive. So maintain that bullish stance on the index, 19,200 as a support for the index over the near term, and would wait out for larger cap stocks to participate.
Okay, wait and watch more for a more broader participation within the large caps. In the meantime, still in the thick of earnings and at the fag end actually all through this week. So let's address one more set. We've got the management of Bas International Services, Shikhar Agarwal, the joint MD, joining in on the show right now. Shikhar, hi, afternoon. Good to have you in ET now. What explains this sharp hit on EBITDA?
What do you mean? The EBITDA actually has gone up. If you see, our EBITDA this quarter is the highest ever. It's at 86.7 crores. And we've done a profit after tax of 82 crores. And if you see the EBITDA margins, EBITDA has grown 52% compared to similar quarter last year. And PAT has grown 60% compared to similar quarter last year, which is the highest ever growth in EBITDA and margins of the company.
As per our consolidated year-on-year numbers, it seems like it was a downtick of 44.5%. So I stand corrected there.
Yes, no. This is just to correct you. Maybe you are taking the half year. Half year, we have done 152 crores of PAT. Our EBITDA is 166 crores, which was 88 crores last year. In the H1 last year. So we have grown more than 100% on that front also. So there is a growth of. I think the numbers are maybe a little bit wrong from your side.
But let's take a look at what you are suggesting in terms of the margin profile then. Shikhar, what's the number of margin this time versus last year? And overall, how the trajectory is expected to move?
Correct. So this quarter, as we've done an EBITDA of 86.7 crores, margins that we were doing last year at the same quarter, we did 56 crores. The margins were around 15 to 16%. Already, we have surpassed the EBITDA margins of 20% this year. The margins are upwards of 20%. And I think this is the highest ever margin percentage also that we've achieved within the company. And we expect to maintain similar levels of 20% of margins. And whatever revenues that we've achieved in the first two quarters, first half year, we are expecting to maintain that momentum going forward.
Let's talk about volumes now, because that's something that people thought will be impacted by the geopolitical tensions that we are seeing, whether it's with Canada or whether it's with respect to the war, etc. Could you talk to us about how the volumes have panned out in the quarter gone by, and how is it looking for the December quarter now?
Correct. So see, as our business is global, we operate in 64 countries. We work with more than 40 client governments. We recently won also a contract with the Slovakia government, Germany, Italy, Portugal. So definitely there are different global events happening in different parts of the world, different points of time. But on a consolidated level or a revenue level, it does not impact our financials or numbers. As you know, we are working for the Indian Embassy in Canada. There was a brief halt in the visa now, which has resumed. But we have in fact seen a growth in different categories of applications like OCI and different consular services. So there has been no hit, regarding different wars happening in different parts of the world. There's a minimalistic impact for the time being, but we are seeing a growth, in different all the aspects of the company.
Okay, Shikhar, also wanted to get a sense from you. Recently, we've kind of got reports from whether it's Sri Lanka or Thailand that they are, doing away with the visa, requirements and all of that. Is that an emerging trend, and is that something that could impact the volumes?
No, I don't think it impacts the volume for us. All the Schengen governments that we work for currently, numbers have been growing. More countries are reducing visa requirements. We are winning more contracts. And not only that, we are also going to consular services. So maybe governments might be doing, if you see Thailand has also done this, I think briefly for a few months after COVID, to boost the tourism. And maybe they have done it now again, and maybe it is going to come back. But, for us, it does not have any impact on our financials or numbers.
Taken. And quickly, if you can talk to me about what is the value-added services that you want to increase, because I think this year you have a target to achieve double-digit revenue growth and, of course, volumes on the higher side. And also, what about acquisitions, because you're sitting on a decent amount of cash volumes as well?
Correct. So see, we as you see, the volume that we were doing in 2019, pre-COVID volume, we still are not 100% back to that level. In the first 2 quarters, I think we probably would be doing 80% of that volume. Certain countries, have, still volume have not come back fully. So as the volumes increase, revenue and profitability will further increase. Our revenue per application has definitely increased. We have gotten some increases in service charges. The Spanish global contract that we won was at a higher service charge than last time. There has been certain increase in different categories of services that we are offering to the applicants. So definitely revenue per application has increased, in the industry as a whole, because of which we have seen an increase in EBITDA margins and also revenue of the company. Going forward, as we grow as a company, cash definitely is piling up. We are actually looking at acquisition. We've already declared dividends. We're looking at some of the players in our industry and also the other business that we are doing, digital service business. We've seen a massive growth even in that business. The PAT has grown by more than 50% even in that business, compared to same quarter last year. So we've already filed the DRHP for that company. So definitely, we expect further growth coming in that company also.
Before I let you go, word on that IPO of your subsidiary that you were planning. What's the timeline?
So BSE Services, in which we have done a revenue of around 85.6 crores in this quarters and a PAT of 13.3 crores, has seen a massive growth of 50% compared to similar quarter last year. We've already filed the DRHP. Now depending on the approval, we plan to list the company within this year. Post the listing, this is a listing for getting money into the company, so it will be preferential share allotment. So when the money comes, that money is planned to be utilized in acquisition in that industry and also for the new contracts that we are eyeing up for winning in different geographies of India.
Right. Okay. Great to have you on the show. Thank you so much for taking the time out and joining us today. That's the take coming in from the management of BSE International and how their quarter went by was. Let me also take the conversation forward. Daljit Singh Kohli as well as Sudeep Shah both on the show. Sudeep, Kunal was making a point that, while he remains to have a bullish bias in the index, what needs to be seen is whether there is more large cap participation. Where do you think leadership within the large caps is going to come in from if we have to clock in the next lap on the index?
Good afternoon, Manisha. See, what I feel is Kunal is absolutely right. We are not seeing any major moves, say, from HDFC Bank or Kotak, or for example, even Reliance is not moving much. But action, I guess, it's starting in ICICI Bank, Axis Bank, and even Larsen is showing some signs of picking up from here. So I feel from the large cap space, L&T, ICICI Bank, and Axis Bank would remain my top preferred picks, as well as what I feel is Axis Bank is outperforming all the other banks. Now, if you see Bank Nifty's move in the last 3-4 days and map it with Axis Bank's move, Axis Bank is outperforming. It is not only sustaining above its major moving averages, it's also trading above its previous week's swing highs now. So what I feel is from the current level, Axis Bank can be bought 95 stop loss and a target of say 1060, 1070 on the upside.
Okay, fair enough. Point taken. Daljit Singh Kohli, just wanted to get a sense from you with respect to the latest earnings that we have seen. A couple of these cement names have actually managed to surprise, whether it was JK Lakshmi Cement or JK Cement. The volumes are better and the margins are also, seeing an expansion. What's your take on the cement space? Would you be a buyer?
Good afternoon. Yes, we will be a buyer in that segment because we have been waiting for this for quite some time. On the benefits from the input side should start flowing, and the icing on the cake is that they have been able to manage price hikes also, especially in the month of October. They had a very good price hike, and that is sustaining over the period. So, which means that there is a demand for the product, and their companies are able to pass it on to the consumers. So cement as a whole sector is doing very well. We were expecting that EBITDA per ton should improve from here onwards, and probably next quarter we'll see even better numbers from all these companies. We are holding one of the stocks in our portfolio, and we remain bullish on the sector.
Point taken. In fact, hold that thought. We'll do one thing. We'll slip into a very short break, but come back. We discuss more stocks which are buzzing in the trading session.
Back with closing trades right here on ET now. We're holding on to the closing trades, but no, not a recovery at all in sight for SBI or for that matter even Titan, which has now drifted lower. About a 0.5% downtick is what that stock is currently sitting on. You've got Infosys, LTIM, Wipro. They're also just about marginally in the green. But yes, it's autos which are in top gear right now. So everything from an Axis Bank, not quite auto, but iShares, Tata Motors, etc. They are the ones which are actually holding out very, very smartly in trade. But the one sector which has been a top performer year to date has been real estate. Here's Chris Wood from Jefferies telling us why he sees still an ongoing move in the realty sector, even in the next 4 to 5 years.
So I've got 4 property stocks in my Indian portfolio. We've entered our 3rd year of a property upturn. Now, last year when the RBI was raising rates, the property stocks did very well, I believe, in 2021, when people recognized that the property upturn was starting after, remember, a 7-year downturn. Then we had RBI raising rates, so the property stocks corrected. But although the property stocks corrected last year, the actual property upturn continued. The property upturn was not impacted at all by the monetary tightening. And then in the last few months, as the markets become more hopeful that we've seen the last of RBI rate hikes, the property stocks have rallied again. And it remains the case that, Indian property sector or Indian property stocks are very small relative to the size of the economic opportunity. You had this very dramatic regulation or reform of the property market created by the Real Estate Regulation Act, RERA, which has caused a massive consolidation amongst developers. So the surviving developers are in a very strong position because so many of the competitors have disappeared.
In fact, real estate sector, yes, that has been on an uptick, 15-year high for the index. Many stocks sitting at record high level. Daljit, is the is the best behind us, or is there more?
I don't think the best is behind. There is still a lot more to happen. The sector is witnessing good demand. We are seeing across the various cities the demand is very well intact, and in fact this premiumization, the bigger houses, better amenities, all those things are actually playing out very well, and these are all things which are in favor of the organized players, because the smaller players, unorganized guys, they cannot afford to do all this. They cannot offer you these amenities, etc. So I think it is all in the favor of organized players, and the pan-India players definitely are taking that advantage. We are seeing that pricing power is there with them. Most of these property developers have increased the prices over the past few months, and every time the new project comes, it's coming at a higher realization. So which is a good thing, which will mean that they will have much better profits over the next 2-3 years. So I think this cycle will continue for another 2-3 years.
Right. Okay, that's the take coming in on the realty pack. Sudeep, let's have your take as well on if you were to buy any of the realty names afresh, which would you pick? Sudeep, you're on mute.
Yeah, sorry. Yeah, so if I were to choose any real estate stock at this point, I feel that would be Prestige Estates. See, the results in the last 2-3 quarters have been very good in terms of Prestige. And even if we see the stock, the price action is very, the structure is very good here. If you see the daily, weekly and the monthly chart time frame, the stock is in an uptrend. There have been minor corrections, there have been minor consolidations, but all the dips during those consolidations have been bought into. And so what I feel is overall the entire space is looking good, but my top pick would be Prestige Estates. And in the last few days also, we have seen a good consolidation between 720 and 760, 770 zone. And today we have seen a breakout from that consolidation. So with volume. So I feel that from the current levels also, Prestige can move up to 860, 880 on the upside. And one can keep a stop loss of 765 for the same.
So So that is the verdict as far as real estate stocks is concerned. But Daljit, what about the primary market action? Seller World saw a bumper listing at that 25% gain when it listed. And tomorrow, of course, it's Mamaearth, which IPO will get listed tomorrow. What kind of gains should we expect there? And what should investors do in these names? Should they book profits on the first day itself or hold on for long-term gains?
Yeah, IPO market, I don't know how it works, what kind of valuations they get, and how do they decide on what kind of pricing they should come. Now, we have been learning throughout the last 3 decades that getting a stock at 100 times PE multiple or 5 or 6 times of sales is definitely not a good idea, unless you are so confident that it will become 10 times of sales over next 2 years or so. And if that can happen only if that is the only company in that sector existing on earth, which is not the case. So I don't know how this valuation has been arrived and what is the, there has been good. We have seen the IPO subscription numbers are fantastic, which is a big surprise for me. I never thought that we will get this kind of subscription for this high valuation, especially in the aftermath of the two earlier much hyped stocks, which we have seen after 2 years now they are coming back to their listing prices, etc. So despite that, people have not learned their lesson. I don't know how things will work. We are away, obviously, as a fund, we don't invest in IPOs. We normally wait for some more after the listing and see more numbers and action happening. But in terms of my opinion also, I would definitely not invest at this valuation.
Okay, Daljit, great to have you on the show. We'll let you go on that note. Since we're on the subject of what's happening in the primary market, we did speak with the Seller World management right after their listing, and here's what they had to tell us about the business going forward.
See, raw material price at present is very soft actually, and we feel that at least in the next 1 or 2 quarters it will remain so. And accordingly, since the raw material prices are in our favor, so definitely gross profit margin has improved actually accordingly.
The export, I think so, is at the similar level of growth what we had last year, and I do not think it will shrink to anything, but it will grow, because some of the segments we were not even exporting because we didn't have the capacity. So for us, definitely it looks on the growth side.
Welcome back. Well, 19,400 has been scaled, so we are at the highest point of the trading session. It's large caps, mainly Reliance Industries, Axis, even Hero MotoCorp, Eicher. These are the names which are actually supporting the market right now. Axis Bank as well as ICICI Bank and HDFC Bank too, all are actually supporting the index. So we are seeing a move of anywhere between 1 to 3% on some of these banking names, and that is what is leading the rally, apart from, of course, the heavyweight Reliance. And then L&T too is sitting with a gain of around 2.5%. Having said that, it's the broader markets which are very vibrant, but there are big movers as well there. In fact, if you pull up the JP group of stocks, you will see a lot of volatility there. Jaiprakash Associates was sitting at, I think, upper circuit earlier. That has seen a bit of a reversal. It's now down 10%, and JP Power too is very volatile in the trading session. And the other, so-called penny stock, if you want to point out, is also Reliance Power. That too is seeing a lot of volatility as well. But it's that time of the year where we talk about wealth generation. Diwali as well is at the end of the week. So we thought we'll start building up the Diwali cheer by getting you some of the Diwali picks. We have Sunil Jain, the head of equity research retail, Nirmal Bang, joining us on the show to bring us their Diwali ideas. Sunil, hi, good to have you on the show. Well, I see a lot of, stocks in your buy calls for somewhat 2080 with an upside of anywhere between 20 to 50%. But let's talk about the one which has the biggest upside. 5-star, you are suggesting a target price of 1100 on that one. Talk to me about what makes you so positive about 5-star.
See, 5-star, this report came out few days back, and in last 3-4 days it has moved up a bit. See, the business model is quite different from all other small banks, small NBFCs. Here, the loan size is quite small, and that too in specifically in giving loan to business customers. We had seen small ticket size loans, but they are all in housing finance. But here the business is quite difficult to do, and we don't find much competition for five-star businesses. And this quarter result also was so great, and they are consistently growing at over 30%. And looking at the business model and low competition, they can still continue to grow at 30% plus in coming next 2-3 years. And also, important thing is their asset quality. Even though the businesses are difficult to do, and but their selection of loan process is very so strong that consistently they are doing keeping their asset quality very strong. So that's why we like this and had recommended this stock.
In your list of stocks, I see a few of these recent IPO as well, whether it's iSilks or Kalamandir or Vishnu Prakash Pungalia as well. Do you think these IPOs were very attractively priced and hence there's quite a bit of headroom for them as well to grow?
Yeah, definitely. In fact, we had recommended Sai Silk also. It's in retail space, specifically focused on women, wherein sari contribute around 6-70% of their sales. So the important thing is the business model is like that. They are self-funded. They don't need to raise any great capital. They don't need much capital. They can do their on their any store level or even at the company level easily 20% plus ROE. And also the growth potential is quite well let down. They had opened around 9-10 stores last year, which are likely to contribute in the current year. And they will be opening similar amount of stores in the current year also. In fact, today also they would open one stores. So one more important thing which is quite attracted us for this particular company is that their store become profitable from the first day itself. They make an event of opening any store and they start making full profit on the first day itself. So that is quite different from all other retail players. So and the valuation also looks very attractive at 10 times EV by EBITDA of FY25. So which is much lower than all other retail players. So that also looks good to us.
The other one I wanted to talk about was SRF, which is part of your portfolio. Along with that, your view on the entire chemical space, because interestingly, it coincides with Morgan Stanley's note as well on the chemical sector this morning, saying that yes, it is undervalued, and they think the sector is underappreciated, and right now one can see big gains being made. What makes you enthusiastic about SRF in particular?
See, SRF story is known, means nothing different, and most of the houses covers SRF. When to buy, that is the key point in SRF. So if you go and buy when things are very good, you will get at a very high valuations. If you want reasonably good valuation, you have to see some challenging times, which is related to industry, not to the company. So right now, what we are seeing that chemical industry is suffering from a lot of challenges, both domestic and international. So these challenges are there is an overstocking or liquidation of inventory, and a lot of prices of chemicals are coming down. So there is a lag effect. Once the raw material come down, then the finished goods comes down. So in some quarter they faces challenges. So all these problems are there. That's why the stock has also corrected, and we are getting at a reasonable valuations. But the long-term story for SRF and companies like that, which are high quality in chemicals stock, are available at reasonable valuations. So that's why we had recommended SRF at current point of time.
There is this whole talk about the realty and infra boom, which of course in Mumbai we can see all around us. Help us understand what part of your portfolio actually has exposure to this particular theme?
In this report, we had not recommended any of this, but we like companies like Man Infra. We had recommended to our customers this stock. Then, apart from that, Godrej Industry also looks bit reasonable and can see some growth from here. But more importantly, we would like to play this story from the companies which are supporting this real estate sector. In the sense, by the whole the theory of supporting like companies like ceramic companies or pipe company, which are going into the constructions and all. So we had seen a lot of development recently, a lot of pre-sales happening, a lot of constructions are also going on, but the sales of all these ceramic companies and all comes afterwards. So we like that particular sectors a lot, and which can give a good, reasonable, specifically tiles and all, Kajaria and all. We prefer those stocks.
So, Jayan, on that note, we'll let you go. Of course, we see stocks like Sangvi Movers, etc. in your portfolio as well in the Samvat 2080 recommendations. That could be one of the themes in the overall construction space. Thanks so much for making time and speaking with ET now with your Diwali picks for Samvat 2080. But shifting focus and taking a look at what's happening in the market in the last few minutes, we have seen a bit of a surge, and if you look at stock specific action, it's BKG which is reacting to its earnings. The earnings for you at the bottom of the screen, wherein the profitability has jumped up by 46% and the revenue has also seen quite a bit of jump, and that's the reason the stock has seen a vertical move. The other one is Policy Bazaar. The numbers of course came over the weekend, but we are seeing a bit of a delayed reaction on that one, holding up with a gain of almost 4% after the intraday dip that it saw. But Devang Mehta also joins us from Spark Private Wealth. Devang, why don't you start by giving us one of your top Diwali recommendations, given the fact there's festivities all around, cheer with the Nifty hitting that 19,400 mark?
Thanks, Anisha, for having me on the show. I think wouldn't be able to recommend any single specific idea, but yes, as a theme, we clearly like something in the auto and auto component universe. We know that it's a part of discretionary consumption, and India INC has been seeing sales of cars, passenger cars over the last complete festive weekends, maybe Navratri or the start of Diwali season. I think I've been just reading about luxury sales for cars as well as for real estate as well. You're seeing the inventories getting sold off. You're seeing soft launches being bought into. Most of this high-end discretionary luxury demand for cars, for real estate, as well as the capex that is bound to come in the industry, being government capex, being the front runner. I think most of these industries will do very well. So particularly on the sector front, yes, auto components, a lot of building material / home improvement / capital good type of businesses is what we recommend to our clients in sort of building the portfolios.
Sure. Okay, that's the take coming in the market right now. Let's just take stock of what's been leading the Nifty. The fact that we're at the 19,400 mark right now. There's Divi's, there's iShares, Hero MotoCorp. L&T has been very strong. A good 2% off a move coming in on that stock. Bajaj Finance is holding strong by about 2%. Tata Steel is contributing quite smartly to that particular move on the index also today. ICICI Bank is looking good. There's Bharti and even Reliance, which has perked up a good 1% as we speak right now. Kunal, we've been often discussing, the underperformance of Reliance and HDFC Bank, but you're more gung-ho and betting on Reliance making a quicker recovery than HDFC Bank, is it?
Yeah, especially after the last week move where Reliance moved up, I think, by 100 points in just a matter of, or 80 points in a matter of couple of trading sessions. That really could probably act as a catalyst to the stock price, because after such a kind of a sharp fall in the previous expiry as well as over the last 3 expiries for Reliance Industries, I think specifically post the Jio financial demerger, I think from that 2600 odd mark, the stock had fallen almost 400 odd points. I think 2250 approximately was the low for Reliance Industries, and I think in the last couple of days this 100-point up move could probably be a catalyst to the stock price, and that's what I would believe the momentum could be a lot more stronger. ICICI Bank is also now trying to look very attractive, so again it retested below the 200 DMA, bounced back higher from those levels, and now maybe another couple of percentage points and it could break past even above the 50-day moving average. That I believe could be another stronger candidate for a breakout. So I believe now that the likes of IndusInd Bank, which is actually acting as an outperformer from the private sector banking name, I think that tag could probably go back to ICICI Bank.
Okay, point taken. Sudeep, in the meantime, I wanted your take regarding the PSU banking names after that solid rally that we have seen for most part of the year. In the last few weeks, we have seen a bit of underperformance from PSU banking names, and of course SBI and Bank of Baroda are the big drags today. What would be your recommendation within the PSU banking names? Should one, let's say, book profits in some of these names?
No, Anisha, I feel that it's not yet time to book profits in PSU banks. It's just that the sector, after a big move in the last 6-7 months, has been, say, right from March 2023 till September end, October first week, the index has smartly rallied around, say, around 40-45%. So it is just taking time. It is consolidating at higher levels, and you would have these knee-jerk reactions like we saw a move in railways, we saw a move in defense. Now all these sectors are just going, are just consolidating and taking their own time before making the next move on the upside. So overall, we are very bullish on the PSU banking space. But yes, in the meanwhile, in the short term, we feel that it could consolidate, and one could just have a cherry picking kind of view on this entire space. Stocks like, say, PNB, Bank of India, they look really strong, and Bank of Baroda also overall is good, but just it's just a result reaction. So I feel around 180, 185, when that stock comes in that zone, that would be a very good entry point for Bank of Baroda.
Devang, wanted to get your opinion in what explains the underperformance in SBI today. BOB, of course, was a weak set of earnings, but why SBI? And you think days like these should be deployed to add positions or even buy afresh on SBI?
Yes, I think probably not only SBI, but as a whole banking sector. Yes, we know that some of these banks have started to perform very well. But I think if you look at the fundamental scenario, what has changed over the last 3, 4, 5 years, the NPA is getting sort of wiped off for most of these companies, banks' balance sheets. And again, the lending cycle starting, the credit growth starting to happen. I'm also told that probably the bank loans are at a 12-year high. A lot of people are getting in for consumption as well as capex. So the sense one gets is, yes, this is an excellent sector. There are a couple of market leaders over there like HDFC Bank, ICICI, Axis, SBI. If you want to play the banking sector as a proxy play for the economic growth, yes, these are good candidates. So you're right. On a down day, when you feel that the banking sector has sort of underperformed the overall market, these are good times to sort of build definitive positions and gradual positions in these businesses.
Taken. Just wanted to highlight a few other buzzes as well. Of course, you have Eicher Motors, which is trending higher on that Citi 90-day positive catalyst. And the other big brokerage, as we were highlighting earlier as well, was the Morgan Stanley note on the chemical sector. And they have upgraded the likes of SRF as well as, Aarti Industries. And both of these stocks are reacting quite positively. In fact, Aarti Industries has managed to pile a double-digit gain now. 12 to 13% higher on that one. And of course, JSW Infrastructure, which is a result reaction, is also higher. And ditto can be said for JK Cement, which is higher by 9%, followed by Ujjivan Small Finance Bank, which is gaining almost 8%. But one of the big other companies that reported its numbers was Divi's Lab. Shushti, what was your key takeaway from the earnings? And more importantly, what was the commentary in the con call?
So the earnings of Divi's Labs were not that great this time around. They happened to miss the street estimates when it comes to the EBITDA, profit as well as margin outperformance. But the revenue was actually in line. We did see quite a muted action post the earnings, but just a while back we had the con call of the management wherein positive commentary coming in onto the growth going ahead. Though I can say that there was not much of a change in the product mix or the pricing environment that the company is seeing currently. But going ahead, they are expecting, or they have come up with a positive commentary when it especially comes to their custom synthesis business. So firstly, on the product mix, that remains unchanged quarter on quarter. The generics contributing 60%, custom synthesis contributing 40%. Onto the generic side, they do highlight that the pricing pressure actually continues in the generic API. But going ahead, they are expecting that to normalize, and not just that, the volume growth has been quite robust. In the con call, the management indicated that double-digit volume growth in the generic side of the business is what they are witnessing currently. So if the prices also support, then we can see good jump in their generics segment. When it comes to the custom synthesis, the management did highlight that they see two big custom synthesis projects contributing significantly from Q3 onwards. So from 40% contribution, the number could actually increase going ahead. The material consumption this time was actually higher to 42% due to the change in the product mix when it comes to their export outlook. So export to the US and EU contributes 68%, which was actually 67% in Q1, and they expect the recently filed DMF to contribute significantly from FY25. So this was on the number front. Onto the capex front, the company did say that the unit 3 will come operational in Q1 of FY25, and then they are not just expecting the revenues to inch up, the operational expense will also go higher, but they are on track with their capex plan. So these commentaries were definitely seen on the positive side. Actually, nothing negative has come in, and that I believe is the major positive from Divi's Lab con call, and even the stock is higher, trading by 4.5%.
Okay, so That's about Divi's Lab, and that explains the 4 to 5% up move that we are seeing on the stock right now. Separately, what else is happening in the market? Well, not much. It's more of the same. Amber Enterprises is actually inching high. Metropolis, which is also a result candidate, is also high by 7%. And Zomato is the other one, which has managed to gain 6%. Devang, were you positively surprised by the earnings of Zomato, or der hai durust hai?
That's a good one. I think probably the stock went through a huge round of correction post listing, and it was in the news for sort of all the wrong reasons. It's extremely encouraging to see this new age businesses also doing well. Though we don't hold Zomato for our clients and have never recommended that. But yes, it's very good to see that the entire market breadth has shifted towards, be it old age businesses, new age businesses, or sort of this type of B2C and B2B businesses. Most of these companies this time, what I see, that markets has been extremely charitable in the last few days. Good numbers have been rewarded. If we would be talking this 15-20 days back, I think the mood was completely different. But I think the mood has also changed. And if there is good numbers, decent commentary, market has been sort of charitable. Yes, I think Zomato seems that's an improvement in numbers. August quite positive for this business.
Okay, so that's about Zomato. But in terms of the other earnings reaction, we were talking about Metropolis, which is higher by around 5-6%. Let's play actually some of the bites and the managements we interacted with today, because some of these stocks are reacting. Let's listen in to what their commentary is regarding the future. Okay, I think we'll just get those bites very shortly. But of course, the key takeaway was that the volume uptick that we had seen on Metropolis a while ago on account of that COVID test is behind. But at least they're managing to kind of beef up the volumes. Acquisition is something that they do see in the markets right now. There is a lot of opportunity, but they want to make sure that the company that they acquire matches them in terms of the corporate governance as well. So that's why they're taking time and evaluating all opportunities. In fact, JSW Infra also said that they are looking at probably having a stronger second half of the year versus the first half of the year. So let's listen into what all of these managements had to tell us.
It's just about like 4 or 5 weeks now since we got listed, and we are going on some kind of investment and acquisition spree now, and we would like to continue this to making it sure that we don't compromise on our returns, making it sure that we don't get into anything and everything just because we have cash or a solid balance sheet. We would like to be very, very accretive in our investments.
We were happy to focus on the smaller towns in India and engineer our growth based on that. During the last 2 years, we have started specifically focusing on the larger cities, and therefore they are driving our growth much faster than the normal growth that we are getting in the smaller towns. I do not foresee that we will overtake the number 4 player in a matter of 1 year. It would take a little longer than that.
While competitive intensity has decreased in the last 2 quarters, this will at least hopefully stall the increased discounting that was happening in the industry. And we do believe that, usually by year 1 or 2, we do see a fair sort of operating break-even. And then by year 3, we do see it coming back to the group margins.
Okay, that's the managements of JSW Infra, Indigo Paints and Metropolis, highlighting how the quarters coming ahead are going to look like for them. Holding in smartly, actually, 19,400. Kunal, are we going to stay put, build on to these levels? How is the pre-Diwali week going to be?
So, in the last half an hour, last 1 hour, there are a lot many large cap names which have started to move up higher. So, TCS, Infosys, for example, there are traces of short covering which is happening into these IT names, large cap IT names. So, that should bode positive for the IT space as well as for the markets overall. Then you have ICICI Bank, which is leading the charge from the front. It's now on the verge of breaking out above the 50-day moving average. This could be again a very strong candidate of a breakout and a possible retest of the previous highs. I think 1,000, 1,007 for ICICI Bank. Bajaj Finance is also one of the stocks which is recovering 2.5%, and I think it's come out of a 7-day or an 8-day trading range for itself. So that could also be a strong candidate of a breakout. And then the last half an hour, last 1 hour, you've seen many of the mid-cap stocks actually ebbing off from their day's high. So this could probably be a strong case that maybe the money is moving back towards the larger cap names, and with short covering into the IT stocks, I think the conviction could get a lot more stronger.
Right, okay. That's the take coming in on which way the markets are going to head. Just Let's just see what else is lined up when it comes to trade tomorrow. Besides, of course, a whole host of global cues. We will have Power Grid in terms of earnings, so not really market moving in that sense. But yeah, a lot of fundraising from the likes of Alok Industries, Inox Wind, Dilip Buildcon. There's Atul Auto as well, which is going to be mulling a buyback to Cochin Shipyard, a split of shares perhaps. In fact, let's revisit Cochin Shipyard. It's been a while we've been tracking that stock. Considering the stock split, of course, the stock is holding up 6.5% as we speak right now. And of course, the other one is going to be the listing of Honasa Consumer, which is the parent of brands like Mama Earth and the like. So that's going to be an interesting one to look out for, right?
Yeah, but interestingly, while the overall subscription figures were quite healthy at 7.6 times for Honasa, if you look at the retail subscription, that was just 1.2x. So, bulk of that subscription has actually come from QIBs, and retail is still being a lot more cautious and tentative, which might just be a healthy sign in terms of them being a lot more watchful of these IPOs as well. Devang, have you been tracking some of these IPOs, whether it's, the likes of JSW Infrastructure, etc., which reported good numbers, Cello World, which got listed today, and Honasa, which will come out with IPO tomorrow, or rather listing tomorrow, and Protean, which actually opened for subscription today?
Not actually tracking IPOs, but one trend is very clear, Anisha, that there is still no sort of euphoric moves in any of this. A large IPO coming and sort of sucking in the capital, and also every retail investor getting trapped in. I think gone are those days. Probably, I think it's become a lot more smarter that if there are good companies available in the secondary market, people are more than willing to put it into maybe SIPs or buying directly. If there is a merit in the IPO, we've seen that a lot of IPOs have got oversubscribed, and they also rewarded investors this last 1 year. A lot of buzz in the investment banking activity, a lot of buzz in the corporate finance market. I think this is all what we are seeing. As you rightly said, there are so many IPOs in the pipeline, there's so many deals, there's so many buybacks. So a lot of activity is keeping on thriving. But the best part is that the thing as such, which is euphoric and which should sort of alarm the investors at this point.
Nothing euphoric, nothing alarming at this point of time, but what's actually good for the markets is the kind of momentum that we are seeing. So 19,400 has been held. There are a lot of these big movers in the last 2 minutes. Amber Enterprises is one name that deserves mention. Bajaj Electricals posted its earnings is also showing a good momentum, and Max Healthcare is the other one. Kunal, on Amber Enterprises as well as Max Health, any recommendation?
So Amber Enterprises looks interesting. In fact, I think on Friday itself, the stock had given a 4-5% up move, had given a breakout about 3,100 mark, and today is a follow-through up move. So again, a 9%, 10% up move for Amber Enterprises after Friday's price action. Looks quite attractive at current levels. May not be going with a full throttle buy in terms of position sizing, but yeah, I think in terms of the breakout, it looks very attractive. Max Healthcare is something which I don't track, so I'll probably skip that.
Okay, so that's the chart check on a couple of these big buzzers. You also have Transport Co-op, Jeevan Small Finance Bank, HBL Power. Some of these names are also doing okay. But let's take a look at some of the other buzzers in terms of the indices as well and sectors. What is doing well? So metals is something which is actually perking up now. You have Jindal Steel, which is up around 5%, APL Apollo, SAIL, National Aluminium. These are some of the names. Deva, what will be your recommendation when it comes to metals as a pack? Should one avoid this space completely, given the moving parts are many and it's difficult to catch the timing? Or if you have a long-term view, maybe it's a good time to get into some of these metal names?
Most of these companies had a dream rally in the last 1.5, 2 years, and you know that what cyclicality brings to the table when we talk about metal businesses. Ideally, yes, for the next 6 months, 1 year seems like we are getting into a good cycle. Probably, yes, we are getting into a cycle where realizations are improving. Most of these companies have also reduced their debt and structured it in a way where it's not going to stress them for the next 6 months. But as you rightly said, it's very difficult to time this type of businesses. So ideally, yes, hold for the next 6, 9 months, 12 months, and then probably start reducing your positions. But right now, I don't see it's a time where it's going to sort of underperform in a medium term. So, but clearly right now it's hold, but over a period, one needs to be very vigilant and should review this sector on a continual basis.
Let's begin winding up for the day. Before that, actually, let's just get in the BTST ideas very quickly. Kunal, what's on your list?
So buy calls on NAM India, the stock which looks attractive above 400 levels, targets of 440, stop loss at 390, and Cochin Shipyard is something which again seems to be making a strong comeback. above the 1,000 mark. So would suggest a buy with 1,050 as a target, stop loss 972.
Right. Sudeep, what about your strategies?
The first call would be Ultratech Cement. We've seen cement is moving well today, and I feel Ultratech is breaking out with volumes. So can be bought with 85.50 stop loss and 8800 target. And the second one would be Eicher Motors. Strong action in auto stocks, and the stock is now just breaking out of its consolidation of the last 2.5 to 3 months. So can be bought with 34.70 stop loss and 3600 target on the upside.
Okay, so that's how we are wrapping up the trading session above the 19,400 mark. In fact, it's been a few weeks that we have managed to scale 19,400, so it's a good number to end the trading session with. It was almost a 1% rally on the Sensex, advanced decline ratio on the positive side. In fact, most of the sectors were also in the green, except PSU banking names, which were underperforming a bit, especially led by SBI and Bank of Baroda. Rest of the names were holding up okay. It was metals that ended as the top gainer, with Jindal Steel, APL Apollo doing okay. And from the broader markets, JSW Infrastructure, Acello World, the new listing, RT Industries, Inox Wind, Amber Enterprises. These were your top gainers of the trading session. On the losing side, however, it was Angel One, down about 6-7%, Poly Medicure, SCI and Bank of Baroda, the top losers. Okay, that's how we are wrapping up the day. Thank you so much for being with us. We'll see you bright and early tomorrow.